What are you doing in there? Are you showing up for Core Moo this week? We're going to talk about the Altos reports for this week for Bend, Sisters, and Redmond. It's going to be really quick. And then we're going to talk a little bit about number one, inflation is coming down. The Fed announced the new inflation metrics about a week ago. And just yesterday, we had news of the debt downgrade for U.S. sovereign debt. We're going to talk a little bit about that and how that affects the U.S. mortgage market. All right, let's get into it. All right, so we're going to talk a little bit about inflation today because the report came out. Inflation's been moderating over the last few months. But what does that mean for you as a home seller, home buyer? Because inflation directly affects mortgage rates. So we're going to take a look at this chart here. Headline, inflation continues moderating. You can see we're at the green line there on the end. Boop, right there. This was the peak last year and we have been steadily climbing down. That is a good thing. That means that inflation is slowing down. It's still arguably higher than the Fed's target of 2%, but we're not at the high 8%, which means it's a really hot economy. I got a friend that's coming to say hi. You can see the set. This is Willow. Yeah. I guess Willow wants to be part of the market update this week. So anyway, inflation, if inflation's higher, mortgage rates tend to be higher. Inflation seems to be coming down. And what does that mean? Well, mortgage rates tend to lag behind the inflation rate. So we're still up around 6.5%. But if inflation is now approaching 3.1%, is what it's here, that could mean that mortgage rates are going to come down as well. Just to kind of give you some perspective, let's take a look at the historical chart for how inflation and mortgage rates relate to each other. So this here is titled, Mortgage Rates Follow Behind Inflation. As you can see, the blue line is the inflation line. And here it kind of spiked last year. And you can see the green line is really lagging. It's at the peak as well. So maybe we'll get lucky and we'll see it kind of coming back down again. It doesn't always happen right away. As you can see, inflation dropped pretty fast, but the mortgage rate really kind of meandered on down. So it's yet to be seen what the relationship will unfold over the next coming months. But if we can keep inflation down, that should be a really good thing for buyers that are looking to get in and for additional houses coming on the market. Because as I've been saying for the last month, inventory has been pretty low historically, and it's because sellers don't want to swap into higher rates and buyers are kind of freaked out by mortgage rates, even though all historical accounts kind of say that this is really, a temporary situation. All right, so we are on to the Altos report for Bend today. Check it out. I just want to thank Altos Research. You can always get a report like this for yourself. You can say here we are looking at Bend, Oregon, the zip code 97703, which is really kind of downtown Aubrey Butte area. Market Action Index is 37, and then we've got median list price 1.379 million. New list price is a median for new listings is a little bit higher. 1.47. We really want to call out this days on market. You can see they're still trending up, which again is indicative of a cooling market. And then we've got 38% of transactions are experiencing a price decrease. It's actually down a little bit, week over week, but still relatively high over the 90-day period. Okay, on to the Altos report for Sisters, Oregon. You can see this is August 3rd. I'm doing it a little bit late, but we are at a balanced market. It is neither a seller's market or a buyer's market, right? The low inventory is kind of seller advantage, but these climbing days on market for all listings is kind of a strength for buyers. You can see though that the days on market for new listings really is tending downward. Looks like the realtors are doing their clients a service and pricing it right where they can. The median list price for all listings is still edging downward, $960,000, but the median list price for new listings really bumped up It is 1.35 million. What is happening in Redmond? Let's take a look. So Redmond, we are still in a slight seller's market, pretty strongly in a seller's market actually. The median list price is edging up for both things on market and for those new listings. Cost per square foot is at the lower end of the 90-day range at about $321. And again, both days on market for the entire inventory and for new listings, that is things that have come on in the last week, is trending up, which is not great for sellers. It means that there was some buyer advantages creeping in. If you have any additional questions about any of this, feel free to reach out, make comments below, and I will be glad to get that for you. All right, let's talk about something that definitely affects the local real estate market. We're going to talk mortgage rates, and we're going to talk about them in light of the news this week of the U.S. debt being downgraded from AAA to AA. Find out what that means. All right, according to an article on Bankrate, the last time the U.S. debt was downgraded was in 2011. And what followed was historic lows, actually, for mortgage rates. So what's happening now? How's it going to affect us? So in 2011, when the mortgage rates dropped, this actually led to a surge of buying activity because homeowners and buyers could afford more house for the same payment. When mortgage rates go down, there is a quantifiable kind of effect that it has on the local real estate market. Among these include you have increased affordability, increased demand, greater refinancing opportunities that are actually viable for homeowners. There's a more widespread feeling of economic stability, which can boost consumer confidence. And then you also have the impact on inflation. Let's take a look at each one of these step by step. So when it comes to lower mortgage rates, it seems pretty obvious, right? Lower mortgage rates mean people can buy a bigger house for less money. Monthly payments are going to be lower. This has the effect of making buyers qualified for more options on the market and means that you have a greater buyer pool for each home that is on the market. And that can be a really good thing for creating a seller's market, actually. Let's look at higher demand. Kind of related, the more affordable homes become for a marketplace, the more people can think about home ownership, right? Those that have been saving up, that have money on the sidelines, can actually participate in the marketplace. Those that are transferring from bigger homes can scale laterally or invest in multiple properties. So it does create higher demand in the marketplace, which again, it lends itself to kind of a hotter market. So while this probably won't be the case this time around because we just got out of a period where there was rock bottom, historically low mortgage rates. If somebody has been staying in their home for a longer time, say 10 to 20 years, and they are looking to move, well, when you have lower rates, it can be more attractive. You can refinance and lock in a lower rate. Although it's pretty likely that a majority of people that wanted to refinance already did during the last kind of low interest rate environment, because it's sensible to think that interest rates don't last forever. All right, so what's the gist of this whole downgrade situation? Well, it turns out that one of the credit rating agencies, Fitch, who's one of the three big credit rating agencies for liquidity on the stock market, has cited the kind of political unrest or the inability for Congress to come to a sustainable agreement about managing the budget, managing debts, and just sort of the increased risk for kind of unrest within the United States were cited as reasons for the credit risk. In my opinion, this is not a serious problem. It has happened in the past, and it doesn't really kind of factor into the larger macro picture, with the United States still being the reserve currency for the world, and still regarded as kind of one of the highest quality sovereign debt instruments in the world. So overall, in the short term, I don't see this as having huge implications to affect the local mortgage rates. If credit risk starts to get priced into these instruments over time, maybe because there is no recovery, or we don't re-achieve that rating, or we get downgraded even further, at that point, it would become a little bit of a different discussion, just because, at that point there would be a trend in downgrades, and professional investors would start to price in the risk of default, and that would, I think, become a greater factor on mortgage cost in the future. For now, we've got a lot of competing factors. You have inflation rate is lowering over time. Some economic experts agree that the Fed has achieved a soft landing and that we are not going to experience a recession. Others, of course, disagree with that, but the numbers reported by the Fed seem to point to that. This rating change in the past has not had detrimental effects to homeowners. In fact, it has caused investors to run to safety instruments, which are bonds, and rates have gone down after that. So we'll see. It remains to be seen what happens, but this might just be a big nothing burger. Time will tell. All right, so this is a little bit of an addendum of sorts. I've been working on some charts and data visualizations of market data. So I just want to share with you really kind of quick and dirty what I've done. I'm going to share with you the last month's close data for Bend, looking at the information by architectural style. So, there's different home styles here in Bend. We've got Northwest, lots of craftsmen, and there's also kind of some new contemporary. Of course, you'll find ranch and bungalow styles. So I'm going to highlight just kind of a fun view, a graph that I made that highlights that data and its sort of market statistics. If you're a seller or buyer in the market, it could be relevant information for you to think about either the offer you want to make or when you want to price your home, if you want to be considering how style is impacting price. The other chart I'm going to show is also for the Bend market. Just because this is running a little long, I'm only going to keep it to Bend, but you'll be able to see the activity by different subdivision. So you have kind of what the max and the min price are and how the different subdivisions are comparing. This should give you a really nice view or a good sense of which subdivisions are sort of more upmarket versus downmarket, whether there's kind of a broad range of diversity or of socioeconomic diversity in the subdivision. Remember, these numbers are pretty small. Like if there's 100 closed transactions, each subdivision might at most get 8 transactions. So it's by no means, statistically significant, but it is just kind of fun to look at the data and you can ask some other interesting questions. So hope you enjoy it, and that's all I got. Bye. So hey, I'm really excited to share with you guys some of the fruits of my nerdy programming behavior on market data. This here are market stats by architectural style for Bend for the month of July 2023. So all of these dots each of them are a sale of a home that had the architectural style of Northwest. So this was one of the most popular styles that was sold last month. There were 68 of the homes last month were of this style. And you can see that on the bottom axis, the X is the sold price per square foot. I was just interested to see if there's any relationship between the style of the home and sort of where price is clustered. And you can see there are a couple outliers. There are some here that were under $100 per square foot, and then there were here on the far end. It was one that was around $850 a square foot. But they tend to really be clustering here, between roughly $350 a square foot to just over $500, right around that 510, 515. So if you are looking for a Northwest style house, you can expect that fair market value based on last month's activity is going to be right in that $400 to $500 a square foot range. And then here on the y-axis we can see the days on market. Now I use a logarithmic function because so many homes have been moving off the market really quickly. You can see here, it goes 1 day on market. So we had 4 homes that sold the first day they were listed. And then this whole big grouping underneath here, this first grouping is anything that was sold within the first 10 days. And then anything here in the next grouping was, the next 90 days. Most of the homes are being sold, before 60 days on market. So this is kind of a fun little chart. We can jump over, we can see these are craftsmen, right? And they have a different range entirely. So the average price per square foot or median price per square foot is about 421. So a lot of things clustering in the mid 300s to low 400s per square foot if you're looking for a craftsman style house, with the high range being right under $700 a square foot. And you can see here that the craftsmans tend to be on the market a bit longer. Those Northwest homes, which is really Northwest Crossing, Tetherow, are moving pretty fast. A lot of them were under that 10 days. Well, here we can see a bit more of a cluster, into that 10 to 100 day mark, with a lot of homes kind of clustering in at the 15 to 55 day range is kind of the sweet spot. And then the other home I'll talk about is contemporary. There were less transactions. There were only 13 homes sold last month that were contemporary, but I just want to call out the range of pricing, right? The outlier, of course, is the one that was sold at around, oh my gosh, almost $1,400 a square foot. And then on the low end, were homes that were just shy of 300. But the average or the median are kind of clustering right around $600 a square foot, which is pretty upmarket. So if you are looking for a contemporary home, there is a premium for that design. Just something to keep in mind as both a seller really looking to go to market, or as a buyer. Those homes will tend to be kind of more on the upmarket of things. And then I also quickly want to talk about the most active subdivisions for the last month. So you can see on the left hand side we have Tetherow, Northwest Crossing, and the Bridges were the top 3 subdivisions. Now the coloring really indicates kind of where the prices fall. So anything that's kind of more yellow is going to be upmarket, and anything that's going to be deep indigo is going to be a little bit lower market. So we can go here to Tetherow. The houses sold last month were kind of in the high mid range at 2.6 million, down to the low side, which is about 875,000, and that's not the lowest of all of these subdivisions. You can see here on the bottom, Cranbrook ranged from 570,000 to a little over 500,000, and that kind of represents the low side of the range for the month. Broken Top had the most expensive home sold last month at 3.35 million. And you can see kind of a composition of the subdivision as a whole. So Broken Top tends to have upmarket and does span all the way down to kind of down market options. Aubrey Butte does tend to cluster in, with its 4 transactions at everything sort of at that kind of upper mid or upper tier. It's just kind of a fun view on the data. I'm always exploring how I can create some fun visualizations on market data. If this is interesting, please let me know. If you have any questions, also just reach out. I'd love to talk to you. All right. So how was that? Market's ever changing here in Central Oregon. Look, I'm going to be traveling next week with family, so the weekly market update might come a little bit late, but please come back provide comments, hit that like, share, subscribe, all them buttons. They're down there somewhere. It helps this channel. It helps me know that you guys are into it. And I look forward to connecting with you again next week. Reach out if you have any questions. If you have any ideas about what you want to know about, any places that you want featured, please tell me. I'd be glad to make content for you. Okay? Have a great rest of your week, and I look forward to seeing you again. Bye.